All right. It's been a while, and I've needed to do this video. I did do something similar a few months back, I guess maybe a little bit longer than a few months, called Why, no, I'm sorry, What If I Owe Taxes, where I alluded to this stuff, but did not go into great detail concerning the actual forms involved. I did, however, go through the calculations needed to fill out these forms, and so I'm not going to go over the calculations on this video, but I will link that video onto this one so you can have that. First things first, I want to say if you do owe the IRS, you are, um, there's a statute of limitations of 10 years. And so a lot of times when I have clients that come to me and say, hey, I have not filed taxes for so many years and I know I owe a lot of money, the first thing I do is I calm them and say, wait a minute, that may not be the case, because that tax is only collectible for 10 years. All right. A couple things. All right. And this public in front of you, really a procedure manual. A CSAID date is the date at which the tax due becomes uncollectible. It has been more recent that IRS agents are reluctant to information, but if you ask specifically for a CSAID date, or if you ask specifically for a payoff calculator, which every agent has access to, then you will more than likely get this information that you need concerning your debt. And you don't have to go into detail because a lot of times, especially if you're calling the IRS, they will route you to a collections agent whose sole purpose is to try to get paid. And so you want to, and you want to get the CSAID date on your tax, because if the CSAID date is a year from now, to many of my says, don't worry about it. Just wait. Unless you have a pressing that needs to be resolved quickly, it's best to just simply wait it out. After a year, the CSAID comes in, you no longer owe that debt at all. So that is always again, just want to say again, CSAID date, right, and payoff calculator, things you'll need to ask for in order to get this information. This information can also be found on the account transcript. Sometimes I have transcripts not have a said date. In that case, you will have to ask for that CSAID date specifically. But again, the account transcript, the CSAID date, and the payoff calculator will give you this information. All right, so let's go into the purpose of the video, which is, what to do about tax debt. Okay, like I said before, you may not owe the debt at all, right? And so the first thing you want to do is you want to go out to the pre-qualifier tool that you see here. Okay, calculator goes back to the previous video I did. What to do if I owe tax, right? Talks about the calculations that you need to go through to figure out whether or not you even owe taxes in the first place. All right, so that's the first thing. Not only that, this pre-qualifier tool is required in order to fill out this form. And by the way, this is IRS form 656B. The B stands for booklet. Okay, you would definitely need this in paper form, but I don't suggest that you print off all 32 pages. You won't need all 32, okay? But we're going to go through it anyway, just so you can kind of see what is needed and what's not. And what I'll do too is, before we go through this, we'll talk a little bit about but first, I'll talk about the application fee. So the application fee for this thing is $205 unless you meet low income certification guidelines. And so you'll definitely want to look those up because they change every year. If you are considered low income by IRS standards, which has to do with income and number, you do not have to pay this fee. Otherwise, you do for sure have to pay the 205 application fee. And again, all this information changes. So currently it's January 2022. This particular form is April 2021. They may come out with a new form February 2022. I don't know. So you always want to make sure that you get the most recent up-to-date form from the IRS website to make sure that you are filling out the correct one. Otherwise, your offer will be denied. Okay. All right. So along with the 656 booklet, you will also need to fill out a 433A or 433B. Okay, the 433B is for corporations, partnerships, LLCs, etc. All right, the 433A is for wage earners and self-employed individuals. Okay, so if you owe individual taxes, if you owe if you owe individual taxes, 433A is what you'll need. If you owe any sort of business taxes or payroll taxes, 433B is what you'll need. Okay. All right. So first thing first, this information pretty much straightforward. I have seen in the past that names have been misspelled or a name completely wrong, and so if the name's different on this application than what's on the account transcript, even if that name is wrong or misspelled. Okay. All right. Nick, I've said this before, I'll say it again. If your spouse is not part of this, not put your spouse on this application. Please, there's no need to include someone that doesn't need to be included. Okay, so even if you are married, unless your spouse owes this debt with you, right, there's no need to put your spouse on this application. Please. The other thing that I want to talk about is going to become important. I just explained to you the low income verification. We talked about the different calculations that's involved with this. You definitely want to plan ahead, right, for who's going to have the dependents on their tax return. Because if, let's say you are married, right, but let's say you guys file separately or what have you, okay, you want to know beforehand who's going to have the dependents on their tax return. Now, of course, when you're doing this 433, if you're doing this offer, you want to have as many dependents as you possibly can so that you can meet those income guidelines. And so it'll behoove you, again, to add as many dependents onto this application as you can, but you also want to make sure that those dependents are also going to be on the tax return that you're going to file that will inevitably become due when this application is filed. Okay? All right. Next thing, wages for self-employed or for or employees. This information is not necessarily needed, okay, especially if you have a new employer, right, that doesn't have anything to do with your old tax debt. You can kind of put anything here. I will say, though, that if you are one of those people that have had the same job for the last 10 years and every year you're filing the same W-2 from the same company, you want to go ahead and make sure that the employer information on this section of the application matches that W-2 that you've been filing for the last 10 years. If you have a different employer every year, then again, this information doesn't really matter. Feel free to put an old employer on there if you need to, okay? Same thing goes with the withholding allowances claimed on Form W-4. Again, this information won't necessarily be important. The reason why this is there is because if you put 6 allowances on this application, but you only have 2 dependents on Section 1, that's going to be a problem. Okay, so you want to make sure that the allowances on 4G match the number of dependents in Section 1. Okay, that's really important. But again, this information is not something not going to be verified with the actual W-4 on file. So don't about it too much. Make sure that whatever you have here on 4G matches Section 1, okay? And again, like I said before, if your spouse is not part of this, if your spouse does not owe this debt, do not include your spouse on this application unless you are using your spouse as a dependent, meaning that your spouse does not have any income. If your spouse has income, it doesn't make sense to add your spouse to this application because they're going to include your spouse's income with yours to determine whether or not you even qualify for this offer. Okay, all right. So financial information. This is important. Are you party to a lawsuit? If you are, definitely for sure put this information here. The reason this is important is because lawsuits are public information. It's very easy to look up. I can't really speak to whether or not this information is being verified, but again, it is public information. It can very easily be researched. So you want to make sure that if you are party to any sort of lawsuit, you definitely put that information here. Same thing goes for bankruptcies. Again, public information, very easy to find this information. So you want to make sure you answer accurately here, even if that means going to the court and getting copies of any information that you may need to fill out this section. Also, too, on bankruptcies, I speak to a lot of clients who have bankruptcies. The tax debt did not get included in the bankruptcy, and it's a real shame. And unfortunately, it goes if you don't, you cannot expect a bankruptcy attorney with no experience in tax whatsoever to understand and know to take the bankruptcy. You get that from them. So you want to make sure that if you have any tax debt outstanding, that you add that to your bankruptcy. Matter of fact, my advice to anyone looking to file bankruptcy is to check with the IRS to see if there's any outstanding tax debt, because if there is, you definitely want to add that to your bankruptcy so you can get that tax debt included and wiped away clean. Sometimes it is important, even if you have filed a bankruptcy with the tax debt, that you still go back and file this form, unfortunately, just to make sure that everything is included and taken care of. And that's the reason why they ask about the bankruptcy here, because if you are party to a bankruptcy but it has not been resolved, typically the IRS is going to hold this particular application until your bankruptcy case has been resolved, because they don't know if the tax debt is part of that bankruptcy until the bankruptcy has been resolved. I hope that makes sense. Okay, so again, make sure this information is accurate. Okay. If you have lived abroad, unless you are filing a return with foreign exemption, I don't suggest that you answer yes to this question. Okay, the reason why is because they're trying to catch you up on whether or not you have filed an FBAR or whether or not you have filed that foreign income exemption. Because remember, if you are a U.S. citizen, even if you live in another country, you still have to file a U.S. tax return. Okay, and so they're trying to catch you up here. So even if you have lived outside the U.S., unless you have filed a foreign exemption tax return, you do not need to answer yes to this question. All right. Beneficiary of a trust or estate. Again, you want to answer truthfully to this if you have, or if you know that a trust or estate return has been filed with the IRS that lists you as a beneficiary. Okay. If a trust or an estate return has not been filed with the beneficiary, there's no need to answer yes to this question alone. The reason why this question is even here is because, again, they're trying to basically for income. Because you are a beneficiary of a trust or estate, they can add whatever that is to your income. Okay, that's the reason why this information is asked of you. Again, if you do happen to be a beneficiary on someone's insurance policy, but a trust or an estate return has not been filed with the IRS, just say no. Okay, just say no, and you'll be okay. That information is private, and someone would have to go through a lot of trouble to find out if you're a beneficiary on a life insurance policy. All right, that's just the way it is. That's just the way it is. All right. Same thing goes for fiduciary or contributor to a trust. Now, the reason why this is here, and I want to bring this up, is because I've talked in the past about trust and the benefits of trust and how you can hide assets with a trust, right? So again, this goes back to a trust return with you listed as the trustee or as the grantor. All right. If you have, then you want to answer truthfully, because of course the IRS has caught that, because your social security number is on that trust return. If you have not filed a trust return with your social security number on the return, then please answer no to this. Okay, simple as that. Again, trusts are filed with the state. Sometimes they may be on file with the county, but again, you would have to go through a lot of trouble in order to verify that information. And so typically, unless a return has been filed with the IRS that lists you again as a fiduciary, grantor, or a trustee, just answer no. Okay. Safe deposit box. Again, unless you have some sort of 1099 from a bank showing some sort of interest or something from a safe deposit box, answer no to this question. All right. Again, the reason why this is asked is because they're trying to verify income. Because if you have a deposit box and you got 10 grand, that 10 grand is now part of yours. You can use to pay tax. Keep in mind, banks are private. And so it would take basically a court order to the bank to tell the IRS whether or not you have a safe deposit box there, and then the bank would have to also disclose the contents of that safe deposit box. When you open a safe deposit box with the bank, there are terms and conditions, and you would have to read through those terms and conditions, or you would have to ask your banker how they handle court orders, because in some cases, the bank will not disclose that information, and in some cases, they definitely will. All right, and so you'll want to know that. But again, in this situation, unless you have a 1099 from that bank because of the safe deposit box, just say no. All right. All right. And then number 11, in the past 10 years, have you transferred any assets for less than their full value? Almost always answer no to this unless you filed a return showing that you transferred assets for less than their full value. And I can say that there are cases where parents or benefactors have transferred real estate in a lot of cases for like $1 or something, and that kind of stuff is filed with your county usually. Okay, and so while that is public information, again, they would have to go through a little bit of trouble to get that information. And so this one is kind of a toss up for me. I can't say definitely for sure say no to this because those county property records are a bit easier to get to. But again, it does require a bit more digging than what I've seen the IRS do, unless they just have some vendetta against you. And again, this goes back 10 years. You can always claim stupidity or ignorance, rather. Ignorance in other cases. But again, unless you filed a tax return showing that assets were transferred for a year, okay? And also, too, I didn't say this, but if the answer is no to most of these questions, then you will just leave everything blank. Don't put any NAs or anything like that. Just check off no, and that's it. Just leave it blank. All right, personal asset information. This is important. So I talked about this in the calculation video, but it's important, right? So the IRS wants to have copies of bank statements, and my suggestion to you is to give them one bank statement. With that being said, your credit report, which will be pulled by the IRS, will show any sort of credit cards, any sort of store cards, any sort of market accounts, right, where you have me stop something like that and show. Um, Pull your credit report. Make sure that anything that's on your credit report also shows up here. And that goes back to the insurance thing too, because in some cases, an insurance policy may be paying you interest or something like that, and so that information is going to be something that you file with the IRS every year. If not, at least the insurance company is going to be sending a report to the IRS showing the interest you've made. Again, you want to make sure that information makes it onto this application. Otherwise, that can get you easily denied. Okay, so cash on hand. You always want to, you know, put that down as zero or something like that. It really depends on what your calculations are at the end of this thing. I usually leave that blank, and then I go to the end and I see if I have any wiggle room to add more assets. If I do, I'll just, I mean, cash on hand. It can be coins, it can be dollar bills, again, for the most part, you want to leave that blank. Going back to the bank accounts, again, you only want to give them one bank account, even if you have 5 accounts. All right, unless those 5 accounts are on your credit report, only give them one bank account. That bank account needs to have some sort of income. If you are employed or self-employed, it has to have your expenses for food. Okay, it has to have expenses for housing. All right, those are the 3 important things: food and housing. If you, and we'll get to this, but if you own a vehicle and it's registered in your name, and again, it's something that's showing up on your credit report because maybe you have a loan for that vehicle, then you want to show those loan payments coming out of that bank account too. When I have clients that I talk about, once we do all the math and everything to figure out if they even qualify, is we say banking, okay? Because the IRS wants 3 to 6 months of bank statements. Same thing goes for most states when it comes to bankruptcy. You want to have 3 to 6 months of bank statements. And so a lot of times what that means is, let's set up the banking now. And once we have that 3 to 6 months of bank statements, then we can file, right? Because unless your banking is good, you don't want to file this stuff because they'll deny quick, because they'll be like, well, you got $10,000 coming in every month, right? You don't qualify for this, right? So it's in line with showing deposits for all the amount reporting, right? And then showing, again, like I said, food, housing, transportation, if you have it. And that's pretty much it, unless there's some other expenses that we'll go through in a bit here. But again, one bank account, unless you have others on your bank statement. Okay. All right. Okay. Investments. Again, this goes back to your credit report. If you import from any sort of investment company, if you are filing a tax return with Schedule D, capital gains and dividends every year, then you want to make sure that you add that information to this particular application. Now, if you have cap gains and dividends kind of sporadically, sometimes you do, sometimes you don't, you can get away with leaving it off. You really can. All right. But again, this goes back to what shows up on your credit statement. Because again, this information can be obtained, not public information. So it's going to be very hard for the IRS to gather this information from you. Same thing goes with virtual currency. Consistently, right? Then you want to leave this blank. I can't imagine anything like this showing up on your credit report, but if it does, you definitely want to include it. Otherwise, leave it blank. All right. And then available credit. Again, this goes back to your credit report. So it's so important to pull your credit report and know what's on it, because that's what the IRS is going to pull. Otherwise, they would have to somehow issue a court order to every financial institution in the country to figure out whether or not you have an account there. So again, just whatever's on your credit report, you want to list it here. Make sure the information is accurate, okay, as far as the credit limit and the amount owed as of date, okay. All right, Life insurance. Again, unless you're getting a 1099 from an insurance company, unless the information is on your credit report, do not list it here. All right, check no. All right, real property. Again, this is something that's very easily researched, especially if the address on the application matches the address of a home that you own. Okay, so I'm always big on using PO boxes and things of that nature for your tax address. If you must use a residence and residence be a home that you own, then you definitely want to make sure this information here is accurate based on either county records or based on something like a Zillow. All right. In the past, what I have done, depending on the application that I'm using this for in the context, right, I will use either the higher value, which will come from something like a Zillow, or a lower value, which usually comes from something like your county or your parish. With that being said, sometimes it's necessary to also have a revaluation done by your county or by your parish before filing this, because maybe you want to lower that market value even further. Okay, same thing goes for not reconsiderations. What do they call it when you redo your loan application? Drinking coffee, and it's not coming to me. I'm going to call it a revaluation because that's what it is. So, if your interest rate was 4% and maybe now you want to get it down to 2%, that's going to matter here. So, in some cases, it's better to do that revaluation and then file this. In some cases, it's better that you hold off on that revaluation before filing this, because when you do those revaluations, that's either going to put cash in your pocket, which then will need to be added, right? Or it may show that your balance owed is higher, right? So imagine if if your principal balance is now 10,000, like you're about to pay this thing off, right? And the fair market value of the house is 100,000, right? Well, that means that you have $90,000 in equity. And the way the IRS looks at it is that if you owe taxes, that you can sell this home, make a $90,000 profit, and pay your taxes. Okay, so what you want to have is you want to have little to no equity. So revaluing your loan means that, okay, now you have a fair market value of 100,000, but maybe the loan that you owe now goes up to 110,000. Now all of a sudden you have negative equity, and that bodes well for something like this. But like I said, keep in mind that sometimes that means a cash balance in your pocket, and so you have to wait, and that's why personal vehicles leased and purchased. My advice here is that unless you have a vehicle, again, registered in your name, and you also have a loan on it, you want to leave this section alone, all right? The state and federal guidelines for bankruptcy is usually about $4,000. Now, every state is different, and so you definitely want to check with your state to find out the maximum amount of value you can own for a car before you fill out this information. Because again, something like this is going to be very hard for anyone to research, because the value of vehicles is what it is. I mean, maybe Kelly Blue Book, and again, if the car is registered to you, that's not public information. That's something that can be gathered, but again, usually that's done with a court. So this is on your credit report, okay? You want to make sure that the vehicle that you list here has a balance under $4,000. Like I said before, for bankruptcy purposes, check with your state. That value may be more or less, but federally, I believe it's $4,000, okay? Personal assets, again, you don't want to put that you own $50,000 of jewelry here. All right. You want to keep this section very simple, very straightforward. You maybe want to have, a couple $100 of furniture, maybe a couple $100 of clothes, but you don't want to go in here and just add a bunch of stuff. Don't worry about being very detailed on personal assets. And just talking about bankruptcy. Again, every state is different federally. However, personal assets usually don't get touched as long as they're under, I want to say, 5,000. I might be wrong about that. I'm not looking at it right now. But in a lot of states, you can keep your personal assets if they are personal, right? So collectibles and things of that nature in a lot of states are not going to be considered personal assets. So again, you don't want to be very detailed here. If you do, however, have a store card on your credit report, especially if there's a balance there, you want to go ahead and include that, right? And that's where you'll see purchase date, lease date, fair market value, and then loan balance. Again, you want to make sure you have negative equity. So if you have a store card for Haverty's, I don't even know if they're in business anymore. If you have a card that has a $200 balance on there, you want to go ahead and list that. Okay. The reason why is because that gives you a negative $100 of equity, which bodes well for something like this, showing that you don't have a lot of income. Okay. Again, if it's on your credit report, make sure you list it here, and definitely make sure that your fair market value is less than the loan balance. Again, something like this is hard to figure out, but you can go out to Goodwill, which is a tax calculator for figuring fair market value when it comes to donations. And so you can use that in this case for this application. Okay. All right. Now, again, I've already talked about the calculations in a previous video, but here you will this part in pencil, right? You don't want to ink down anything because, even I, with years of experience, have to go in here and constantly play with these numbers, constantly, to get them just right, okay? Because you're looking at wages, right? And then all the other possible income streams that you have here, right? Right? And then you have all of your expenses in the previous video. You want to make sure that your total income and expenses come out to like a $2 difference. Okay, you want to those do not fill out the allowable expenses. The allowable expenses are in that video that I keep referencing. Okay, and again, that changes year over year, so you make today for collection standard purposes. All right. All right. If you are self-employed, this is where you'll get all this information. The type of business, only use product or service. Don't get very detailed about this. Okay. Another thing to mention is that if you are self-employed and you report a net profit, I say you pay estimated taxes on that net profit. And so you want to make sure that if you haven't done that, you file this thing, because part of the offer and compromise is that you are up to date on and will continue to be up to date on all taxes due. And part of those taxes due is estimated taxes. So again, if you are self-employed and you want to have estimated tax payments that you are paying, not only that, but those estimated tax payments will count against your income. And so that bodes well for an application such as this. As far as recounting your income, I suggest using previous tax returns in order to do that, because of course this is asking for your current today income statement, which hasn't been reported yet. So use previous current business income, because your current business income is, right now it's January 2022. Who knows what your business income is going to be? and you want to, you don't want to report too much. All right, so you want to use patterns to exactly what here, and again, go back to tax statements that you receive. So if you typically receive a 1099 miscellaneous, you want to use those previous 1099s to determine what you report here. If you started using a new merchant, right, that you haven't reported in the past, I don't suggest that you list that here. Only report what you've listed in the past, not what you currently use today. Again, less is more in a lot of this case. All right. Business bank accounts, again, this is going to be very important, no different than your personal. You again, if you are reporting that your net profit is 6 months business accounts, also select that. So you have 5 business accounts, right? You want to only report one business account, and you want that business account to have some deposit, and you want to have some business expenses. Honestly, there won't be any typical business expense because every industry is going to be a little different. I can say though that based on your activity number on your previous tax returns is going to tell the IRS what type of expenses they will be looking for. So on your top, a 60 code, NAIS or NAIS, what type of pin on that 6-digit code will tell the IRS what type of expenses to expect on those bank statements. So if you're a delivery service, they're going to expect to see some sort of gas or vehicle maintenance or something like that, right? If you say that you are beauty supply, they're going to expect to see those type of expenses. So you want to make sure that your bank statement matches not only the business, which is the income and the expenses and the net profit that you're going to show on this particular application. All right. Accounts receivable. My suggestion to you is leave this blank. Okay. The reason why is because accounts receivable is something that is specific to you. It's your personal balance sheet, and remember, it is an individual Schedule C tax return, so there is no balance sheet, right? Balance sheets are only for corporates, partnerships, and things like that. And so, if you have an accounts receivable, blank because what they want to that account receivable to your income. I do want to mention though that if you happen to be in an industry that receives government grants, right? That information is pretty easily obtainable. And so you want to make sure that you include that because if you do have some sort of government contract, that's going to expect your income. And what the IRS sees is if you haven't been paid that money yet, it's still revenue because the government will definitely pay you, even though that may not always be the case. You have to list it here. Again, that information can be easily obtained. All right, business assets. Again, less is more. Don't get cute on this thing. Okay, you want to make sure that you match with whatever your previous tax returns have been. All right. Period. On your returns, as far as depreciation and mileage and things like that go, leave it alone. All right. Now, with that being said, if you do need to decrease your net business profit to show that whole feel to add to this thing that you have purchased some sort of that hasn't necessarily started making you money yet. So if you just purchased an asset, right, in 2022, right, when you're filing this thing, especially if it's on your credit report, you want to make sure to list it here. Otherwise, leave it alone. Okay, you can leave the whole thing blank if you want to. All right. This is again, this goes back to your previous tax returns, cash or accrual. You want to make sure most tax returns, some file accrual. You'll want to know what that is when you're filling this out. It's very important. All right. Another thing to mention here is that if let's say you weren't self-employed in 2021. All right. So you never had a schedule C on your individual tax return, but you are self-employed in 2022, especially for purposes of maybe doing this application where you want to show that yes, I do make 1,000, but this income is really 40,000, right? You can definitely do that. Accrual accounts, you want to ensure that accrual status is listed on your 2022 tax return that will be due in 2023. Will be placed here as far as your income and expenses go. All right, that's it for the 433. I do want to say too that timing is a big part of this. Right, timing is a big part of this. This application takes 10 months to process. Usually, that's like the standard. Of course, that timeline can be elongated. Throughout that 10-month process time, that includes quarterly estimated tax payments. Okay, and so it becomes very important that you think about when you file this, because let's say you file it right now, January 2022. Your 2021 tax is due in time that this application is filed, and so you want to definitely file that return. If you wait until April or May to file this thing, well, not only you file your 2021, but you're also going to have to file your 2022 tax return as well, unless you have filed an extension for 2022. And if you file an extension for 2022, the IRS may delay the processing of this offer until your 2022 has been filed. I've seen it happen. All right, so will behoove you to go ahead and file everything for April, just to get the process as quickly as possible, because the reason is that they don't know if your 2022 tax return is going to result in a refund. And if it does result in a refund, they want to use that refund to pay off your tax debt. So if you have not filed your 2022 and it's March or April of 2023, the IRS is just going to delay processing this application until you file that 2022, because what they're going to say is, well, as long as we haven't resolved this application, you still have to keep up with and reporting all your taxes. And so we're just going to wait and see if you file. We're going to be like, you want to be cognizant of that. All right, so the 656 is pretty straightforward. Basically, all the information that you grabbed from your 433 is going to go here. Okay. Again, this is going to talk about your dependents as well as your wages from any job. Again, they're going to ask you for your personal information, and whatever you have on that 433 matches the 656. All right. This one is important too. I didn't mention before about market accounts. Market accounts also are 401ks, and this information is going to be very easily looked at if you have a W-2 that has a 401k on it. Just think about it. If you are filing a W-2 that has a 401k on it, then you want to make sure to list that 401k account here as well as on the 33. Right? If you have a 401k account, an IRA account that has not been reported as far as you taking money out over the last couple of years, you can probably leave it off because it's not going to show up on your credit report either. All this information is matching your 433, okay? Same thing with the housing expenses. All right, this is what we need to get to. All right, now, Section 8 of this 656 is trying to figure out how much you can afford to pay in taxes. And so, without going through all the math, basically, it's going to take whatever you have and divide by 12. If at the end of every month you have $5, then you have to multiply that by 12, and so that gives you $60 here in future remaining income. Okay. You also have the option of doing basically an offer amount, which is saying that, hey, I can offer you guys this much money to settle this right now. All right. And so in that situation, you're going to have left over any sort of equity or any sort of cash, and take you guys $50. Nothing wrong with that, as long as that $50 matches the math that you did at the top. $50 is all you have, $50 is all you have. But you have to put something in there. You have to put something in there unless you really are insolvent, which is very possible, especially if you have credit card debt and loans and stuff like that on your credit report. Again, you want to make sure that your math is right on at the top of this thing and on your 433 to come up with the proper offer amount, because offer amount is higher than the math that you did there. There's a right. You can't offer you $2,000 if you're showing you have is $10. You see my point? So you want to make sure that all this stuff is proper. Also, too, please do not file this thing saying that you have zero. Right? You want to make sure that you are accurately depicting as close as possible what your actual financial situation is, or at least what you are reporting. Right? Again, it is very possible that you have negative equity across the board. It's very possible that at the end of every month you have $0 remaining. But you want to make sure that if that's the case, you can show that from your credit report, from your bank statements, right? Otherwise, you need to have some sort of amount there, even if it's just $1. Okay. Bankruptcy. Again, bankruptcies are public information. They're also going to be on your credit report, so you definitely want to make sure that all the information from your bankruptcy makes it to this application. Okay. Even if that means going back to the court and getting information where the bankruptcy was filed. Assets owned outside the U.S., you actually you want to leave you from that property in your income. Do you have any funds being held in trust by a third party? Again, this goes back to the conversation about trust. Unless you have a trust that has been filed with the IRS, you want to leave this thing blank. Again, trusts are filed with the state and sometimes with the county, but again, it's a lot harder to gather the information. So unless you have a tax return that's been filed, you want to leave that blank. And then the checklist. This checklist is very, very important. I don't care how many times you file this thing. I don't care how confident you are. You want to make sure to go to the checklist is at least 3 if you're paid bi-weekly. So that means roughly a month and a half worth of pay stubs. You want to make sure that you have a statement from that 401k. Again, my suggestion is 3 to 6 months. All right. If you have any sort of Social Security or pension, if you have any sort of alimony, child support payments, any of that stuff, you want to make sure that you have 3 to 6 months of that information. Particularly for child, you want to have a court order as well. You need to get a copy of the court order showing that you have been ordered by a court to pay child support. You can't say that, hey, I've been paying support. Doesn't work that way. Unless those children are dependents on your return and your application, you cannot use child support as an expense unless you have a court order. that's just the way it is. I already talked about that. Yeah, this is important too. If you do have those mortgages, those loans on your vehicles, you would definitely want to get a copy of those loan balances and payoff amounts from, okay, so that means from your mortgage company, from the auction. You want to make sure to get those dollar amounts, how much you have paid, and things of that nature. Yeah, another thing that's important is the any tax liabilities. It's crazy that I didn't mention that, but again, tax liabilities is going to be part of your expenses that will bring down your total income. So if you live in a state that has state taxes, you definitely want to include those state taxes. If you are paying payroll, meaning you have unemployment insurance that you have to pay, then you definitely want to include that as well, because all of those expenses are going to count against your income and bringing down your net income as well. Some of the taxes are due, but they haven't been paid yet, but you have to pay them, and so that is part of your thing. Again, court orders, very important. Court orders. If you're paying alimony but you don't have a court order to, stop paying it. Period. If you do have a trust that's been filed with the IRS, you want to have a copy of the trust document. It's just going to basically say it's because it's your trust, okay? And it has been filed with the IRS. The trust document will detail how much of that trust belongs to you, but also how it's distributed to. Trust may say something like it can only pay you up to $200 a month and no more. So there may be $1 million in that trust, but if the trust document says that you're only entitled to $200 a month, then that's all you have to report on this application and on your tax return. Special circumstances is important, and the reason why is because you want to give some reason to how you ended up in a situation where you owe taxes in the first place. All right. This is no different than closing arguments upon sentencing, right? You want to make sure that you acknowledge, number one, that you know you are responsible. Want to be apologetic, and you make sure that you somehow get across that you're going to take steps for this not to happen again. All right. I can't say that there's a standard reply here, but you definitely want to keep it short and sweet. Don't be too detailed, because again, no one's going to read, a long paragraph. So keep it short and sweet, but you do want to get across that you are responsible for. You don't want to write in there that I don't know how this happened, but no. You want to take responsibility for any tax that you have. Okay. And and that's it. The other thing I want to mention here is when you file this, okay, you cannot have any tax refunds for the next 2 years. So again, you will need to do tax planning, specifically regarding any sort of, child tax credit or anything for the 2 years. To make sure you for that. All right. After that 2-year period, however, you can get tax refunds, but you have to continue filing your taxes on time. You cannot be late at all. If you are late filing taxes, then they will simply revoke your offer, and then all the taxes that you had due when you filed this thing will become due immediately with interest and penalty. So again, this is something like to say, I messed up, I broke the law, please allow me to correct this, and I promise I won't do this again. That's literally what this is. All right, so that's it. If you have any questions, please reach out in the comments.